Gentleman from Illinois, Mr. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chair. Thank you for holding this important hearing. And of course, thanks to Director Chopra for joining us today. Predatory loans, including payday, auto, title, and high-cost installment loans, are a debt trap. These high-cost loans exacerbate financial difficulties and target low-income communities and communities of color. Not only are payday lenders more concentrated in Black and Latino communities, but consumers of color are far more likely to have a payday loan than white consumers, even when controlling for income. For example, in Chicago, a person is 13 times more likely to have a payday loan if they live in a predominantly Black neighborhood, such as Austin, as opposed to a predominantly white neighborhood of Lincoln Park. A national rate cap is necessary and especially urgent given the challenging times that we're facing. We must take action to protect our communities from high interest loans and the dangers of predatory lending, which is why I have introduced the Veterans and Consumers Fair Credit Act to extend the military's 36% interest rate cap to all Americans. Director Chopra, we applaud the CFPB resuming Military Lending Act examinations, as the examinations are critical in ensuring that active duty military members and their families are protected from predatory lending. What do you think the impact of the Military Lending Act has been?
Well, there has been some observations that it has done more to protect military families from credit report damage, from certain debt collection practices, and ultimately there's a view that financial readiness for service members is also about force readiness. There has been some work done by the Department of Defense that shows that loss of security clearance or severe financial distress does increase separations, and that has costs for taxpayers. And it also really limits, for those who want to build a career in the military, their ability to stay on and use their skills. So I do think I do support the Military Lending Act. I have, taught some work at the JAG school before and have seen some of it on the ground. We are enforcing it, and we're happy to be working with the DoD and others on it.
Thank you. Director Chopra, there are virtually no meaningful restrictions on short-term payday lending in the majority of the states. Although the payment protections portion of the 2017 payday rule will help consumers when it goes into effect, large gaps remain, and the fundamental business model of these predatory lenders remains unchanged. To address this problem, I've introduced the Veterans and Consumers Fair Credit Act. Can you explain how the lack of meaningful restrictions on short-term payday lending has impacted low-income communities?
Well, certainly that we are responsible for supervising payday lenders. We're certainly looking at that market actively. We recently released a research study about the impact of certain state laws, specifically laws that provide extended repayment plans, and offered some observations about their efficacy. There's no question that there are challenges when it comes to people taking out high-cost loans and having challenges. The rulemaking that you referred to, there is elements of it that are still subject to litigation, and that process is ongoing. At the end of the day, we want to make sure that there's a fair and competitive market, that people have options, and that people can, go to a place where they get a good competitive rate. Many people do have trouble in this market because they often get in a cycle where they can't ever get out. And that's obviously something that leads to real harms to their credit report and debt collection. So we're very attuned to the problems. We share your concerns, and we're happy to be responsive as you develop legislation and to provide technical advice on it.
Thank you. In my remaining 20 seconds or so, several states, including my home state of Illinois, have passed 36% rate cap last year. Other states have as well. Do you think that these trends in the states will have an impact on the broader financial marketplace?
Well, certainly state laws are a huge part of the consumer protection framework. It is a the system is based on federalism, and we certainly see differences in our complaints and market monitoring based on states and their protections.
Thank you. Mr. Chair, I yield back.